Hello and welcome to another episode of the Consumer Credit Matters podcast. I'm your host, William Black, and today we'll be taking on the topic of Tricolor bankruptcy once again. This is the third episode now, taking on that topic, each one from a different perspective. And today we'll be taking it on from the perspective of the backup, now successor servicer, in this case, Vervent. And we'll be joined by the CEO, David Johnson, and CLO, Chief Legal Officer, Derek Gamble, of Vervent. And they really give us a front row seat in terms of what it takes to prepare for and then deal with the ensuing chaos and trying to bring order to that chaos from the perspective of the successor servicer. Tremendous amount of detail and really a day-by-day accounting from what has ensued only a few short weeks ago. I learned a tremendous amount, as I'm sure you will if you lean into this conversation. I hope you enjoyed as much as I did. Thank you. David Johnson and Derek Gamble, welcome to the Consumer Credit Matters podcast. How you both doing?
Doing well. Thanks for having us on, Will.
David Johnson is the CEO of a company that has certainly been in the headlines recently, Vervent. Vervent is the backup servicer for many consumer credit securitizers. Most notably, they are the backup servicer for the Tricolor securitizations. And Derek Gamble is the Chief Legal Officer for Vervent as well. So thank you, gentlemen, both for joining the pod today. I can't tell you how appreciative I am for you both to get on the phone and get on the pod, I should say, and talk through some of the details.
And before we even get to that, Will, I love your pod. I think it's the most authoritative and the most authentic in the space. So we're thrilled to be here.
Thank you very much.
Vervent is, I founded Vervent in 2008. And since then, it's grown to be a lot larger than it was in 2008. And it has three major divisions. One is a direct-to-consumer credit card business. We issue credit cards, our own brands, directly to consumers. Second is capital market services, where we're providing various service into the capital markets, most notably this backup servicing like we're talking about today. And then third, of course, we are a third-party servicer servicing just about every consumer asset class outside of mortgage. Happy to be here today.
Thank you, David. And Derek?
Yeah, Derek Gamble, Chief Legal Officer and Chief Compliance Officer at Vervent. Been with the company since 2019. In addition to that, have about a total of 13 years of service or the service industry experience within the financial services sector that we know is highly regulated, and in this particular situation gives us reason to keep guys like me employed at the company.
Yeah.
It's interesting because, the Tricolor bankruptcy was a real shock to the structured finance system because it exposed a set of vulnerabilities that most players in the market thought had been engineered out years ago. And it's interesting.
It is. And we're going to get into the weeds today. That's why I'm so excited to have you both on. This is let's say a live situation that is still unfolding. I mean, the two of you and your company have a front row seat that the rest of us hopefully will be able to learn from with everything that you're allowed to share with us at this point, certainly. But thankfully, these types of situations where we have a sudden and surprising Chapter 7 bankruptcy filing and collapse of a multi-billion-dollar finance company with, again, allegations of double pledging and fraud and some really technical, David, as you said, a breakdown in some of the fundamentals of securitization that we thought were in place and may not have been in place, and how we can learn from this situation and how we can, and thankfully, again, it doesn't happen very often. I can name at least two or three other, call them breakdowns in the fundamentals of securitization that have occurred over the last 25, 30 years that are going to make the short list of kind of high profile failures in the technical structures, whether it's legal or operational or a combination of both, that Tricolor now, unfortunately, seems is going to join the ranks of, maybe even top the list of. So
Can I get in there for a second? I just want to like respond to what you had just said.
sure.
Taking it from the top at the 10,000 foot view, we'll say in the last 15 months, Vervent has done more of these than we have in the last 15 years. We actually went back and looked, and 70% of the backup triggers that we've handled have been in the last 15 months.
Wow.
So I know Tricolor kind of stands alone because of the size. I think if you ask people, they say it's the largest Chapter 7 bankruptcy ever. But we've handled many similar situations over the last, half. And those generally are situations that result in where we're at in Tricolor. Most backup triggers do not result in a servicing conversion. We're there to help the investor execute their strategy for recovering their funds out of these situations. And more often than not, that usually consists of providing support while they do a drawdown on the portfolio, or they sell the company, or they raise more funds, a variety of different ways to go about this. And that's one thing that you find about backup servicing, is that it takes many different forms, not just this one. This is certainly the most spectacular one. And we'd be thrilled to recount what happened in the first hours of this.
I want to just address that, because I think you're bringing up a good point, and I do hope we drill down on this point later. And that is, you said that you're seeing a lot of activity in recent months. That means there's a lot of stress on the system. It doesn't mean things are breaking down. It can mean things are working as constructed, but it does mean that there's pressure on the system if the backup servicer is being brought into play. And that is a macro thing that's happening, certainly not isolated to subprime auto, but is probably more amplified in that sector of consumer credit right now. So I do want to kind of, put a bookmark on that and come back to it, because it's an important macro point that has been talked about now it more and more with increasing frequency. And I don't think it's going to go away. So I agree with you. That's an interesting point. Back to the phone call in the middle of, I'm making this up, in the middle of the night, somebody got that first phone call. And I think it would be really interesting to know, how that kind of plays out from your perspective. How does something as sudden as this and as dramatic as this appears to be play out from your perspective? Either one of you can take that. That would be great.
Yeah, sure. I'll start. Usually it's the legal notification that comes in right away that, hey, we need some cooperation because we are triggering one of our agreements to go what is basically immediately designated as successor servicer. As David said, oftentimes in these arrangements, we get a bit of a warning sign. There really wasn't one. It was Friday, November 5th. JP Morgan was the first client that approached us, and they said, hey, guys, we are going to designate you as successor servicer and formally terminate Tricolor on a go-forward basis. A little bit of back and forth. The contracts are already in place, so that makes things really move at speed at that point. And I think David and I were in touch back and forth that evening until we finally got word that we got the executed documents effectuating that as of the very end of the night on Friday. So,
and Derek, that was then on the warehouse side, not on the ABS term side?
That's correct. That's correct.
So that's where that happened first.
Yep, they were first to the dance, the breakup, I guess is the better way to put it.
If you boil that down a little bit, what it means is that we got the call mid-morning on Friday, and we were done contracting by midnight on Friday.
Yep.
It was very quick.
Wow.
Then we had our crisis management teams on the ground in less than one business day. So, they were there Monday night, couldn't access the office on Monday night, got into the offices on Tuesday, and then spent the entirety of the day on Tuesday working with whatever was left, which wasn't much. And slightly into Wednesday before we were informed that we needed to leave because a government agency was coming in to do forensic analysis, at which point we actually lost access to the office, which was unfortunate.
And
but
the bankruptcy was filed, I thought it was on the 10th.
That's correct.
So you were brought in prior to the official bankruptcy filing for the warehouse deals, at least initially. And David, when your team was responding, as you said, within one business day, Were you working not only on behalf of your role on the warehouse deals at that point, but also on the term securitizations?
At that point, we were working on just the JP Morgan
Oh, just
warehouse
JPM.
deal.
Okay.
Yeah. There is, in all of these situations, there's definitely an advantage to being one of the first institutions that flips it over into successor servicing, because obviously there's a queue
Hmm.
and everybody gets in the queue. Let's say after that, we started servicing the accounts, not your general high level quality of servicing that you would expect on a go forward basis, but we were able to get access into their loan servicing platform even before we converted the information to ours and began talking to customers. We kept the consumer payment rails open, so the money continued to come in. We worked very diligently across even just the first month to get access and control of the various accounts. But in that first week, it was really critical. Think about the week where we were notified, we contracted, we got crisis teams on the ground, we were able to put out communications to consumers, keep the rails open. So while other things took a little longer into the next week, like getting a good list of the collateral of the cars and where they were at, things like that. And, we had to go out and actually physically count them. Those took a little longer into the second week. And where it stands now, where we're obviously quite a bit more into it, we run our schedule according to the authorizations that we receive from the trustee. So we have gotten the accounts transferred over to our loan servicing platform, which we did in 17 days, which is extremely rapid.
It is.
Uh, yeah, and we are talking to consumers every day, keeping them in their cars, keeping them rolling, and making sure that people, meet their financial obligations, so we can protect the integrity of the, ecosystem around this thing.
Let me ask you. By the way, there's for me anyway. For me anyway. There's no point too mundane or quotidian about what you need to do in these critical opening weeks. Now, you
Yeah.
mentioned something I actually hadn't thought about. You need to actually go out to the lots because they were vertically integrated business model where they own the dealerships as well as finance the sales of those vehicles, which we can talk about as
Yeah.
its own potential risk factor.
Well,
But
the combination of the dealership, the originator, and the servicer all being combined into a single entity.
right. There's it's rife with potential conflict of interest, as we say. That sounds like it may have manifested itself in this case for sure. Now, you had to go out and count the cars. You had to make sure you had a proper accounting of the financing. So that's taking over the servicing. You said you took over, or you brought over the records into your servicing system in 17 days. Usually, people say that's going to take 60 days on average, and
Hmm.
under duress, maybe somewhat shorter than that. 17 days is about as quick as anyone could reasonably expect. And that's based on my experience in these situations, looking at it from the outside. 17 days is about as quick as I've ever heard it. Um,
I think it might be the quickest that I've ever heard it.
yeah.
Same. Well, and
So,
what the other color I'd add to that, right? Because there were so many things that happened on those first 2 days that we were there, the first 2 business days, right? So number one, on that Friday when we got notified, 1,000 employees were furloughed
right.
with Tricolor, right? It was that following Tuesday, the last remaining 200 that were in that Irving, Texas, were let go. We had employees in that office let go. We were told they were going to get let go. And so the two things that we wanted to really make sure we focused on right away is who are subject matter experts that are willing and able to help. Because as I had to testify for the trustee at the initial hearing, and I talked about the fact this is a unique situation. A Tricolor was like blown down like a tornado, essentially, and we had to rebuild the infrastructure brick by brick. And the only two ways we were going to do that was getting the right people to help us rebuild, and then having the right vendors in place that were going to help us rebuild. So we did a fastest risk assessment I've ever seen on one of our teams on doing something like this to find out who all those vendors were, who the key employees were. At the same time, I'm behind the scenes making sure I'm getting in touch with the authorities that are investigating and so on, making sure we're not hiring somebody on, bringing a fox into a hen house, so to speak.
Right.
So there was a lot of work that was done on that front end that allowed us, when we first started talking to the trustee, when the trustee was appointed, to really have a lot of subject matter expertise that nobody else had at that point. So that really made a big difference, having those vendor relationships and getting the independent contractors started. Right away.
I think on the independent contractors as well, it's a uh, not well thought out situation with many of the situations like this we've been involved in, not just this one, although this one's got a big part of it, is that the vendors haven't been paid in months. Tricolor stopped paying their vendors long before they declared BK. And so when you think about all the critical vendors that need to get paid in order to continue service, whether that be to simply support the website that tells consumers where to pay, or whether it be the title company or whoever, the GPS location device company, they haven't been paid in 5 or 6 months. So now all of a sudden there's these very large arrearages. And since BK has just been declared, how do you get those vendors on board in order to continue that service for as long as you need them to transfer it, or to continue on with them having these very large arrearages? It's a difficult question, and it requires a lot of negotiation. And that's one of the things we spent a lot of time on in the early days, was vendor negotiation.
That's one of the things that I think people tend to discount or even forget about in these, especially coming at it from a securitization perspective, where you think you have, well, look, I have priority, perfection, legal rights to my collateral. I know we're going to go into that, even that aspect of it in this case. But, as a secured investor, your rights supersede those of unsecured creditors. And yet what you're saying, David, is absolutely true. You're still going to have to call it play ball, negotiate, come to terms with the vendors who are essentially unsecured creditors because they haven't been paid.
Absolutely.
And they're holding some critical information. Maybe you can go into a couple of examples of some of the critical points of
Sure.
technology
And
or knowledge or data that the securitized investors and ecosystem depends upon, but is kind of outside of that, outside of that,
it's
strictly speaking.
outside of their control. I mean,
Yeah.
yeah. And yes, they have the legal right and the senior rights to these things, but a lender's collateral is only as valuable as their ability to maintain it. That's it. And in these situations, for example, the GPS location company hadn't been paid in a very long time, not excited about continuing to provide services without getting paid.
Sorry, this is the technical system. This is the technical system that allows you to track where the vehicles are
Correct.
to repossess them.
Correct.
So it's a huge beneficial tool to into the repossession of those vehicles.
It's a big one. There's also the ongoing insurance of the vehicles was another one. So the insurance company had not been paid in quite some time, and they were out of pocket for many damages already over the months that they had not been paid. You need that continuing forward to protect your collateral. The company that manages the electronic titles have not been paid. They're not excited about releasing the titles until they get paid. There's a number of these things where even the company that was keeping the Tricolor internal loan platform servicing system, the company that was managing that had not been paid in a very long time. And we obviously needed that to survive long enough, at least for us to get those accounts over to us. And because it's a Chapter 7, and it just vaporized over the course of a weekend, there's really no other choice but to have them stick around for a while. So I'd say there's about 8 critical vendors that we identified that we've negotiated with, to some extent, and are negotiating with the trustee and with the warehouse lenders to, provide that lifeline to make that happen, which, really gets to, there's a couple of related issues about these structures that just leaves them incomplete. And one of them is that there's almost never an operating fund to handle these types of things, right? In the securitizations, there's $150,000 cap on conversion, costs. That's nowhere near enough to cover what's owed to these vendors, that
Uh-huh.
alone.
Uh-huh.
Forget any costs that, the servicing company might actually stumble into. So there's no operating funds to be had. And then the indemnity. When these agreements are written, everything is, sunshine and flowers and everything is kind of business as usual.
Right.
And the assumptions are that if something bad happens and there's a conversion, that things will continue business as usual, which, you can see clearly they do not. And there will be many lawsuits that spring forth from this situation that people want coverage from
Right.
before they step into it.
One of the things that you and I spoke offline about that is a certainly a good fact in this at least structure from an ABS perspective. I can't speak to the other aspects of the deals or situation, is that there was a step up in the servicing compensation should the backup servicer be called into action, right? So I think it doubled, if I'm not mistaken, from 1.5 to 3 or something like that. Or
Correct.
okay,
Correct.
so there, and this is something, when my former life at Moody's, when we were rating transactions like this, we thought about quite deeply. In fact, was in this kind of tail event scenario, would the backup servicer be incentivized to do what they need to do to collect on the underlying collateral
Uh-huh.
and effectively? And you may always look to those terms in the backup servicing agreement and focus on them to make sure that it is whatever market rate or economical. So I just point that out as at least directionally. I'm not sure order of magnitude, you can tell me, but it's directionally something that seems to be pointing in the right direction for this transaction, at least.
It is. And that's a mechanism that makes sense because often the, initial servicer, if they're the originator, they have many different irons in the fire when it comes to making these deals. And they don't exist on just the servicing fee, whereas we do. So we have a completely different set of incentives when it comes to that. And, a different cost structure. Our cost structure is usually more effective, but we're not subsidizing it with anything from the origination side.
Derek, I wanted to take another perspective on some of the difficulties in the early days. We're still in the early days, the early weeks of this kind of assumption of backup servicing. And one of the challenges, certainly, that I've read about and written about now, at least abstracted away from the allegations, is that of double pledging and how the system of establishing both priority and perfection in the collateral may have been compromised. And, to what extent can you, speak to that aspect in this transaction? And what did you find? And how do you go about, I guess, revalidating the interests, the various interests that, if they're not there, were supposed to be there?
Sure. Well, we've got to tiptoe a little carefully here because there is an active investigation going on, right?
Sure.
On top of it, one of the things that the trustee process would normally bring to the table, and we're still waiting for that to evolve in this current situation, is they hire on a financial advisor, and they've done that to this point. And that financial advisor helps come in and do the forensic analysis of exactly what you're talking about, Will, right? Where we seen multiple vehicle identification numbers and multiple accounts to multiple lenders, where we seen potential loans that aren't assigned that are floating out there, all of that. So what we are doing right now is, as David said, we're servicing, but we're also helping be the data aggregator to get that information to the financial advisor of the trustee. That's a situation we've dealt with it before. David, you can probably speak to a couple in the past that we've done where a trustee has come in. They have that process flowing very, very well, and we're literally handed a file of, okay, these are clean. They've been agreed upon by the interested parties, right? And we're off to the races servicing. So we're kind of in that stage right now. I've had to beat the drum several times over to remind everybody we just want to service. We want to get going here, but we need the sign off both by the lenders and the forensic analysis team to get that out the door.
You have again. If I ask you something that is still not in the
Hmm.
public domain, please just let me know. But in this case, was it mostly tangible chattel paper, or was it e-chattel? Was it a good mix of both?
A mix of both.
Both, because I mean, here you have a different ways of perfecting, and some may be easier, or some may be less easy to get your arms around in, you know, a duress situation that you're in now. I don't know if you're finding that the form of chattel paper has had a meaningful difference in the way you're assuming control over the situation. Maybe you can abstract away from Tricolor and just speak to that more generally, because there has been a movement in the industry to move towards e-chattel. And certainly some believe that would reduce the risk, or at least reduce the administrative potential for entanglement, versus having tangible, especially if the tangible is held by the seller.
That's right. Well, look, in this situation, there were approximately 22 banker boxes of physical titles that were around. And look, you talk about having best in class controls and things like that in place. When we got into those offices on that Monday following September 5th, those those documents were spread all over the place. There most certainly was a designated room, but I know the way we handle even the physical documentation of that stuff, it is a biometric access secured room. Only certain people are allowed in there. You can't bring cell phones in there. You just don't see that sort of. So that was kind of surprising to us, right? And even the fact that the trustees advisor, they were in charge of inventorying all of that, putting in the banker's boxes, so then we could have access to it. In addition to that, there is the title vendor that's involved too. I literally was just on the phone with them this morning, and we were talking about this very subject, Will, of just how much of these are in the e-system, so to speak, and some of the tools that they have, and they're promoting to even say, hey, why don't you guys use these? We think it'll speed things up. So at the end of the day, look, we're all for that, but it's been a little messy, right?
Right.
To put it lightly. So what we're doing right now is we literally are just now getting the access into that vendor systems like today. I think we just got the agreement signed. So we'll have a lot more information at that point in time, because of course, like I said, it'll be a repeated theme. We're here to service and we're here to keep moving along. We need that stuff to be able to release titles, right? And to help the consumers out and get their lives moving forward.
Gotcha. One other aspect that comes to mind as a important dimension to not just Tricolor, but other similar finance company arrangements with securitizations is ACH. Again, I don't know if most borrowers were making payments through ACH payments, and basically a direct connection to their bank account. My guess is that would not be the case given the profile of their borrower, but maybe I'm wrong about that. There are certainly non-prime finance companies out there that have a very high percentage of ACH. So I know that it's not necessarily the case that the two go together. To the extent that you can talk about it, what is the situation with Tricolor, and is that something that you also need to contend with, or not?
Yeah, so it's this part's public record. So Pay Near Me was the primary payment vendor that was used, period. So
Not ACH, right?
correct. Yeah. So
Right.
Pay Near Me is what they were using. I wouldn't be able to speak to the details because Pay Near Me does offer ACH as part of their offerings that are out there as well too, right? So but that was literally the main source of payments that were coming in.
And it's certainly at Pay Near Me is certainly one of the 8 critical vendors I mentioned.
100%.
And this is like an infomercial for Pay Near Me, but they've been wonderful to work with.
Have they?
Yeah,
Great
they are.
company.
Pay Near Me is basically a way to transmit money when you don't have a bank account or an ACH arrangement with your bank account, right? So this is often no.
Many people will walk in and use a debit card. So,
Oh, I see.
there really is a mix of different payment types in this Pay Near Me scenario.
Okay.
So it's not, I wouldn't say that portfolio is heavily ACH'd as you're suggesting. In general, extrapolating kind of, backwards, when we see a situation like this and there's a much higher percent of ACH than other types of payments, it makes us a lot more comfortable, because that's something that's easier to transfer.
Right. It's just well, if you have it papered correctly, you are essentially redirecting those payments to another whatever lockbox or trust account of some type, right?
Yeah. Yeah, which is something that we've been able to work with Payoneer Me on for for all types of payments, which has
Oh,
been
that's
great.
good.
And that really, they helped us keep the payment rails open, which was critical. But getting back to your previous question there,
Uh-huh.
um, there's kind of like a truism about the risk in these structures, which is, the most serious risk in all these structures are the ones that they hide between legal documents, or they hide between data feeds, and you just don't see them. And that, is very much the case, not talking about Tricolor necessarily, but in many of the situations we've seen where there's, roughly, I call it three main types of, call it double pledging or whatever you want to call it. But there's one where you have one loan that's pledged to more than one facility. A single receivable is pledged to securitization A and, warehouse B. And those two don't see each other because they're out of sight. And the second is the issue around VINs. Obviously,
Mm.
this is, has to do with secured loans, not unsecured loans. But, we have seen in the past where one VIN may be securing more than one loan. And in that type of scenario, it can very well be that a consumer has a car and has a receivable. That car gets repossessed, brought back onto the lot, sold to someone else, and a new loan is created, but the old loan is never erased. So now you have one piece of collateral, one VIN supporting two loans. And the other major bucket is the situation where you have just a fictitious VIN, or a VIN that's on a vehicle that's in a junkyard. And it may be used across, multiple loans. It's just a purely fictitious VIN altogether. And those types of things, there are mechanisms, and they're not high tech. There are mechanisms to catch all those kinds of things. But generally, on the ones that trigger, none of those are present, or they're not being done by someone who is, really, really doing it.
Yeah, I know that. Well, the VIN, vehicle identification number, that is, unique to every automobile out there, or should be. And
Hmm.
when you buy a car, it has to go through somewhat of a bureaucratic administrative process through, I think usually it's the DMV of your particular state, right? As step one, I think. And that takes, well, that can take weeks, I think. I've heard
Well,
it
it
taking.
could take even longer because at least in the case of Tricolor, Tricolor was deputized by the state of Texas DMV to issue license plates and registration. So when we went into the office on that Monday, there was actually several very large stacks of license plates sitting around. And these are for people who bought a car and had not yet received a license plate or registration. We've been working with the state of Texas DMV, and they've been wonderful to work with. But now we are deputized to do that same activity. You can see not only was the company originating, selling, servicing, they were also issuing the license plates.
Wow.
Yeah, it's a pretty complete package.
Yeah, there's a lot of opportunity for things to
Yeah.
go wrong.
Yep.
Yeah. And there's also a lot of opportunity. We as a company, we want to keep consumers in their car. We want to keep them rolling. We want to give them a fair and transparent process for whatever it is that they're dealing with. And some people have cars that are in these repair shops, and you need to figure that out. Some of these people have bought cars and they never received a license plate or a registration.
Uh,
I mean, imagine that. You just bought this car and you haven't received that, and you're way over your expiration date.
yep.
There's a number of these things that fall way outside of our servicing mandate. But frankly, when you get to a situation like this, the servicer is the operational partner. Right? We're the ones who are actually out in the world making things happen. And so these kind of non-servicing operations tend to accrue to us. And it just adds to it adds to the pile of things that need to get done in order to make sure that those consumers are able to actually use the vehicles that they're paying for.
I want you just kind of reminded me of another narrative that's out there that maybe you have some insight on, in talking about the obligors here. And one of the narratives that I've, heard articulated, and I think it's, I don't think it's coming out completely out of left field, is that given the region of the country that Tricolor is in, and the population that they serve. I mean, they were clearly marketing towards Hispanic population. And the narrative out there is that, there's been a policy change by the government that is created the right or the wrong incentives for obligors who are under duress to walk away from their credit obligations, and that caused undue duress or stress in the credit portfolio that may have caused, again, I'm going with this narrative here, that may have caused
Right.
there to be more pressure on the financing system, and then caused kind of this misalignment of interests, which often you see things fall apart when the system is put under
Well,
pressure like that. Any
we've
evidence of that?
certainly heard the rumor.
Yeah.
But to us, all it is so far is a rumor. We haven't seen any actual evidence of that. Derek, do you have anything?
No, I mean, I would just say anecdotally, right? There are other avenues versus a Chapter 7 to address that issue. Well, you do
Good
not
point.
you do not see that tornado analogy occurring. You just don't. There's a workout plan and everything that goes with that, and the fact there has been an acknowledgement that there's a federal investigation going on. It could be part of the narrative, but I don't think it is the narrative, right?
Yeah, I would also throw in that, we are currently working on other, what we call hot situations. And yeah, they are similar in many ways, but they're not pointed at the same market. So, you kind of got other things
Right.
are being impacted as well. To me, it's more a tale of being at the tail end of the credit cycle than it is of any kind of demographic issue.
That makes sense. And that, we're seeing a pressure mount in the subprime auto and even just the auto loan sector writ large, mounting. And you would expect smaller regional companies that are right, on the front line of this to have and feel more pressure. But, you're thinking about smoke signals. What I'm talking about, when you back away and look at the aggregate data, you see this kind of steady rise in steady rise in delinquencies. But we got as far as I know, no like red flag in performance degradation leading up to this Chapter 7 filing in the case of Tricolor.
Which was a warning in and of itself.
Right. Yes, it tells you there's there's likely to be something else
Subprime auto
going on. Right.
delinquencies go up and down, and in this case, they more or less just flatlined.
Right.
And
Yeah,
look,
very
those
good
in the
point.
industry, there were a lot of people we talked to at the recent conference we were at. Tricolor was known for outperforming their peers in that subprime space. So again, as David said, all of a sudden to be looked at that way, and then all of a sudden, poof, there's something bigger going on.
Mm-hmm. Well, now they're outperforming in a different way.
There you go. Some bars are meant to be gone over and some under. So.
That is true. That is true. I will say we talked about some of the more quotidian issues earlier, and the Hispanic market reminded me that, since most of these consumers are Spanish speaking, we had an immediate need for several hundred Spanish speaking agents, which we spun up in the case of a couple of weeks, and we were able to make that happen. Which, in an old war story, we did one about a year ago where we needed native Punjabi speakers, and we were able to do that in the course of a couple of weeks. So it's kind of like another one of those small but important types of things that you need to be able to do as a backup servicer.
Absolutely. It's a very good point. And that's, you're also reminding me that time is of the essence in these situations to contact the borrowers, right?
Yeah.
Mm-hmm.
And let them know that there is somebody, minding the store and that you still owe, and here's where you can make your payment.
Yes.
And I think that, at least anecdotally, the general belief is that you need to, there's higher touch, I'll just put it that way, with more non-prime borrowers, just because they don't have as much, call it, financial sophistication, and understandably, if they're in a buy here, pay here situation, and the place where you go is no longer around, you might like, oh well, come find me, or where do I make my payment, or I don't know what to do. You need to tell them what to do. These are auto loans, no matter what kind you have, is a hell or high water obligation, and you need to understand that not paying that will have a deleterious effect on your credit profile, and kind of knock on effects to all sorts of aspects of your financial life, for sure, including the risk of repossession. Nobody wants that, especially if they've got the money and they can make the payment. Which brings me to the next topic, and that is, so people are making payments, and we know, I guess, as of this month anyway, now 2 months have gone by where bondholders are not getting payments. It sounds like, so things are getting up. To what kind of insight can you share with the audience about what's going on with cash flow at this point?
Well, as part of the trustee order that we received, right, it was directed that some Wells Fargo collection accounts were to be able to be accessed by us and held by us, in addition to those Pay Near Me accounts that we've also discussed. So to that end, Wells Fargo's taken a little longer to work through. Lots of red tape, rightfully so. Controls in place, as we were talking about. But payments are flowing. We are tracking those. And literally the way that order states is we are to hold those until further instructed. So again, that links us back to that forensic analysis and where we think we are with what we would have a list of what we call clean loans. They're matched up properly to a lender, to a vehicle, and to a consumer, and then the non-clean loans and that analysis that we need right now. But right now, the plumbing, so to speak, for all the payments and the accounts is there. So we are continuing to watch and monitor those funds. They do go up daily. And so, yeah, we got to be careful about getting into too much detail on how they're doing. But I would just say, I mean, they've surprised us with the performance that they've been continuing with.
Got it. And again, contacting the borrowers, which is kind of day one job effort, that's been going well.
It has been going well. We've seen this movie before, so we made an immediate concerted effort to make sure that borrowers could reach us and that we could reach out to them. There's a big difference in these backup trigger events depending on what the cause is. And it kind of goes from, difficult causes to easier causes. But sometimes you have a company that is venture capital fueled and it runs out of venture capital and it just kind of sinks beneath the waves. Those are very simple. You just kind of continue on with what they were doing. And then you kind of have different causes that can happen, but you get to something like this, where the company is no longer in business. Consumers are going to read that it's no longer in business. There are allegations of fraud. Consumers read about the allegations of fraud. That type of backup trigger event takes more. It takes a lot more. Then there's the kind of further instance, which, as yet to be discussed in this case, and we obviously can't discuss it, but fraud that's perpetrated against consumers, which then comes out into the public press as well. And we've done several where the alleged fraud was perpetrated against consumers. It was in the press. Consumers are then angry, right? And consumers really don't want to pay. It's not just a matter of reaching them and explaining to them how they pay. They really just don't want to because they feel like they've been ripped off. They rightfully feel like they've been ripped off. And even though we're trying to mitigate that, and in those instances, we'll roll the portfolio back, as we say, roll it back through time, fix whatever it was that was done, and then roll it back forward. And, on many occasions, we've sent checks instead of statements. Those are the most difficult. So, in this one, this is the difficult one. It's a high communication situation.
I can only imagine reestablishing confidence in the systems and the records, not only for whatever the point in time that you took over, but going back in time. I mean, that's
Very
not an
difficult.
easy task. That is not an easy task.
And it's not just for the lenders and the consumers, but for the government agencies and regulators as well.
Right.
Not just law enforcement, but also the financial regulatory environment. Everyone needs to be satisfied with this. And, this one is a good example where our communication with the government agencies that are involved is just as important as our communication with anybody else. Uh, they're really going to be driving the bus on a lot of this.
Great. So listen, I want to zoom out a little bit, and then I want to look forward. But zooming out, I'm reminded of the podcast that I had with your colleagues, Lou and Julie, a few podcasts ago.
Oh, sorry. If it was Lou and Julie, it was probably a much better podcast than what Derek and I
I
did.
don't
Much more
know. You know
entertaining.
what? We'll let the data show. We'll let the
There you
data
go.
show what it
Everybody
will.
hang up and watch that one.
Right. But that was a few months ago, prior to Tricolor. I mean, it was, but the groundwork and detail that we talked about in terms of the role and the preparedness that any backup servicer, but Vervent in particular, needs to take to be a credible backup servicer in this industry was discussed at length. And I would, point to anyone who's interested in going to those kinds of details to go to that podcast and listen to it. It is chock full of a lot of great information in that respect. But here we have now a test of the principles that we discussed in that podcast. How did it play out in reality in your view? And is not only Vervent, but is the backup servicing industry prepared to take on these situations? It's such an important role when you need it.
I would say we should talk about preventative measures as well as this. But I'd say in terms of preparedness of backup servicers, Vervent was essentially built from this. This is something we were thinking about day one when I founded the company. And as a result, we're able to move extremely quick on these things. We have the crisis management teams. We have, the ability to hire up native language speakers at a rapid rate. We have no hesitations about going in and hiring, resources from the company that's gone BK or whatever. We have a very well written playbook that's been, done over and over again. I shouldn't say most. I'd say there are many players in the backup servicing industry that don't have that level of preparedness. Many treat it like a hobby instead of a business. And there are companies out there, I refer to it as going naked when you're backup servicing. But if you don't have the ability to actually take over and service it, and yet you're selling backup servicing, you're kind of running on the assumption that, if something happens, well, we'll do something about it. And some of these are very small companies who simply, they don't have the expertise. You can be an expert in, say you're an expert in auto, does not make you an expert in backup servicing. That's like needing to go to the emergency room and instead you get your, GP and you got to wait 2 weeks.
Mm-hmm.
So there's that. There's larger companies who will sell backup servicing, but really what they're doing is renting out their credit rating.
Right.
And they don't subservice it. They don't cover themselves in any way, yet they have no ability to actually, follow through. We're in a different situation right now where we're just on the tail end of converting 8 portfolios for an originator that also went BK. And we know there's another 4 portfolios that exist at a large entity, and they have no ability to actually execute on this. And as a result, they're just sitting there.
Mm-hmm.
Nothing's happening. They're, degrading over time. So, to me, it's like job one is make sure that you have a backup servicer that's actually a backup servicer, not just someone who's, telling you they are.
So capability, that's one point.
Experience
And capability. Okay. And then you were going to talk about preparedness as well, or the things that you do. And this kind of gets into the way the industry talks about it is, are you hot, warm, or cold, which of course are very
There's
subjective,
definitely some of
mushy
that.
things.
Let me add a third to your capability and preparedness. And I would just add, I'm not quite sure how to say this, but you want to make sure you're dealing with people who do what they say they're going to do.
Yeah.
In these situations, contracts are not enough. The situation we talked about with having a first lien but not having control, this is similar. You need to have a high level of trust in whoever it is you hire as backup, because when it gets right down to it, they're going to have more control than would be indicated in the contract. Now, in terms of preparedness, this is a whole nother topic.
Right.
I'd say, let me talk about it in two buckets. And Derek, please jump in. The first bucket would be kind of, very macro things. One would be, you should not have an originator also be the servicer. That, yeah, it seems very basic. If you have, and there's,
But sorry, but that's the whole industry pretty much. Seller servicer
yeah,
arrangement is security. That's a pretty big ask, I have to say.
it's a
But
big ask. Yeah.
I hear
And,
your point.
I'm sure people will be a lot more comfortable with a very large company doing it than, one that is not large and doesn't have a lot of other kind of cred to it.
Mm-hmm.
The second is a third party, an active third party custodian,
Mm-hmm.
right? I mean, that's kind of a given. And the last point on the macro side would be, whatever structure you use needs to have a view across the entire flow of the originating entity. So you can't have a loan over here in facility A, and nobody knows that you've got facility D over there, and you have some place to hide something else. So really, that all inclusive flow of view is important.
Is there a place for technology, new in air quotes, to come into the picture here, meaning encryption or blockchain like a permissioned, encryption techniques to
Well, it could
help?
be solved in that way, but it's not necessary yet for it to be there to solve the issue. You
Right.
think about this situation in particular, again, we're at the end of the credit cycle, and many of the controls that have been put in place long ago have eroded away over this credit cycle, which has lasted 15 years. But just some basic things around like loan data verification, loan document verification, and not a sample either. Like the entire pile of loan documents should be verified.
Yeah.
Use of an e-vault, which is existing technology, VIN validation. It's not such a big deal to take a list of VINs and run them through a validation process every month and make sure they're actual VINs,
Mm-hmm.
right? You can do the same matching up VINs to loans. These are all basic data bumping exercises that can be done. And even some very simple things. We offer kind of a vendor check-in service as well, where you really want to make sure that whatever originator you're dealing with, if you have these controls in place, you should be checking to make sure that they're paying their top 5 or 8 or however many vendors. Because these things, the ones that go BK, they always go the same way.
Yep.
You've got anywhere between 3 and 6 months prior to the BK where they stop paying their vendors.
That's a great one. I hadn't thought of that, but that there's no reason that couldn't be added to anyone's kind of whatever you want to call it, tickler file or radar screen as
Yeah,
a condition to
It's
the
it's
contract.
certainly not high tech.
Yeah.
Yeah, and it's an active product for us, Will. Right.
Is it?
But look, I mean, let's be honest, right? In the banking world, it is very robust when it comes to, should be very robust when it comes to controls, right? But I think that's, JP Morgan, Jamie Dimon had just spoke up about this a few days ago, saying this wasn't our finest moment, right? So even with those controls in place, what we're looking at is, what is that extra layer? And it's more third party oversight, right? That can come in and assist in the situation and not put ourselves in a situation where there's somebody that could be a bad actor and control way too many of the shells that they're shuffling around in front of everybody. So any access to that, I think, makes a really, really big difference.
So what I'm hearing is that new technology may have a role here. It may help, but it's not necessary to really tie down the legal and operational aspects that have been a part of auto finance for decades now. That we have the tools in our possession and have had the tools in our possession to run the business correctly. But you need to have somebody minding the store. You need to have that kind of oversight and whatever you want to call it, tickler file in there to ensure that you've got some fingers on the pulse of,
Yep.
of the
And
power.
look,
Absolutely.
I was going to say, in a normal situation like this, we are a third party servicer. It would be a 3-way agreement. So we would be running reports, for example, that the banks get to see directly, and then Tricolor would get to see if it were these guys in this instance, right? It just gives an independent purview that's out there versus Tricolor just giving them directly to the banks with, again, no third party oversight, reconciliation, or anything like that. And then, as David pointed out too, to be the servicer that's then on multiple portfolios of multiple lenders, you then have a single source of truth where you can do some of this comparison and cross-checking.
Yeah.
Right.
If you can't see the collateral, then you don't control the collateral.
Right. Well said.
And
Okay.
well,
Yeah.
the last thing I would put into that, right, is we all know we're kind of in a lax regulatory environment with current administration that's out there, right? So from my end,
Reg light, I call it.
reg light, that's a great way to put it. Reg
I
light.
like it.
But we all know at any point in time, if the industry doesn't address these sorts of issues head on and we come up with better plans and better controls in place, it's going to get forced upon everybody. And we know with that comes additional cost, additional red tape. Oftentimes, it's not meant to happen this way, but oftentimes it's the consumer that ends up negatively getting affected by that process when it's all said and done too. So I'm really, David and I will be on the bandwagon of really talking to our industry colleagues and so on to make this a better practice and better controls in place on a future state.
Look, I that is such an important point, and that's why we're having this conversation, and why I've had articles and other conversations like it about this situation, and I'm sure I'll have more, because we have to address it. If we don't address it head on, and I think addressing it is it's gonna cost money at the end of the day. It's you're gonna have to throw some more money at this. I don't mean money is gonna
Mhm.
solve the problem, but you're gonna have to scrutinize who your backup servicer is, and you're gonna have to incentivize them properly. But it goes well beyond that. It goes, to the indenture trustee. It goes to all these other third party players that you talked about before, and ensuring that they get paid, and that they
Mhm.
get paid on time, and that they get paid, market rate. Um, and yes, oversight to these steps and processes that are so important to having legal security and title and so on and so forth will require a little bit more money to be paid. And to be fair, I mean, at the scale we're talking about, it is going to be basis points, which doesn't sound like a lot, but every basis point counts, and nobody likes to to spend more than they have to in a competitive world. In all likelihood, this will get addressed. I have faith. That's my own personal kind of compass tells me that there will be a reaction to this in a positive way. The industry will respond positively, and then slowly but surely the cycle will turn. Again, to where it's risk on, and people will this will start to fade into the background, and another many years will pass, and it'll happen again,
And we'll do it again. I agree.
unfortunately.
I mean, if we get into a situation now where, it looks like we may be headed, where the lack of having these additional risk controls on your deal means that your deal costs you more, then the cost of actually having those risk controls starts to fade into the background very quickly.
I mean, this goes back a little bit to the discussions I've heard. You mentioned indemnifications as being a discussion point that you need to have on day one, or prior to day one, right? How important is the indemnification conversation, not only for the backup servicer, but also for any third party, really? An indenture trustee is another one where I know those conversations have a tremendous amount of friction, because you want to be able, as a third party who has a fiduciary responsibility, you want to be able to get in there and act and make decisions, because that's what's going to be best for, call it, the ecosystem, for what you're signing up to do. But you don't want to get sued out of existence
Yeah.
because you acted quickly and tried to do with the best you could with the information at the time, and then later find out that there's a class of bondholders that are very unhappy. And look, it's not if it was an easy situation to resolve, it would have been resolved already. I mean, you have, in these situations where people are really concerned about how much money is ultimately going to make its way through the pipeline, through the waterfall, you're going to have different classes of bondholders pitted against one another for
Hmm.
how much they're willing to spend, or how much the collateral is worth, and so on and so forth. Because you've seen your bondholders, like, if they only need to get 50 cents on the dollar to get out, they're happy getting 50 cents on the dollar. Whereas The Class B and C bondholders and so on are going to be a lot more particular about squeezing everything they can out of the market value of those assets. So that's not an easily solvable problem.
Hey, Will, if you really want to kill your audience numbers, we can do a podcast on indemnification itself, because you're right. It's a mess out there. I mean, and I've run through this scenario and talking to colleagues out there and folks even at the most recent conference of you get a situation like this. I'm looking at just from the servicer purview, right?
Mm-hmm.
To where you have SPVs that are set up and these securitizations and so on. They start to dwindle down over time. There's really not a whole lot more money there. But the servicer is like the plumbing of the system. We're in there keeping everything flowing as it should and so on. And then 3, sometimes 5 years later, you end up getting a lawsuit. And something like that happens to 2, maybe 3 servicers. And you talk about fixing the system, we just broke it really, really bad at that point. So, there's a lot to be had there and a lot to chew on, I think, for all of us
Hmm.
way to focus on.
It's a good topic, but and we're all in the business of making this consumer credit ABS system, ecosystem better. And there's a lot of opportunity here to take some steps that could do that in relatively short order. And the consumers that we serve up and down the FICO chain or across geographies, they all need credit. We all do to get along in today's society. That's how it works. All these products play together to make our lifestyles possible. We certainly are focused on doing our part to continue that. One of the big themes that we heard while we were at ABS East, and obviously we talked about this a lot, earlier this week, was that this type of contingency planning is no longer a check the box item. Now
Mm,
it's part of the credit story.
good to hear.
And I think that we'll see, as you were mentioning, we'll see the reemergence of these add on services where it really is more third party auditing, more third party control, whether that be document verifications or VIN validations or vendor checks or whatever it is. But it'll be a lot of things that can be bolted on to existing structures as opposed to making wholesale changes, would be my guess.
Hmm.
And, that often is, enough to turn the ship.
Well, look, I think I said one in my earlier podcast with Julia and Lou that backup servicing is an undersung facet of the securitization ecosystem. And I think that's going to change. It's certainly changing as we speak. At least I hope it is. And people are going to be focused a lot more on the role of the backup servicer, the capabilities of the backup servicer, and maybe third party oversight in general. But I do want to pause here. I just want to thank you both, David, Derek, for the time, the candor, the front row seat into this situation as it has unfolded, and really, bringing to the at least my audience, the audience of consumer credit in general, an insider's view of how this is unfolding and the importance of the backup servicer role. So thank you both very much for your time today. Really appreciate it.
Thanks for having us, Will. We appreciate your insightfulness on these topics and look forward to, more of your podcasts.
Yeah,
Awesome.
thanks, Will.
Thank you. Thank you
Thanks.
very much, listeners.